looking to get into Venezuela in any capacity now that Maduro is out of power, at least for now?
Well, I mean, I think it's the topic that everybody's discussing in the oil industry. We've come back from holiday. We've been back 24 hours in the office. And I can tell you that the office was dominated by Venezuela chat. I think everybody's looking about what opportunities there may be in Venezuela. We have a history of working all over the world, anywhere that oil is produced and anywhere where we follow the sort of sanctions regimes and so on. So we'll be discussing it with the US government. I think we can probably be of assistance. It's very clear the US government wants the oil to continue to flow. They don't want civil unrest in Venezuela, so they're going to want products, gasoline, diesel, this kind of thing to enter the country. And I would say that we are well placed to assist if that's in fact what's required.
Have you had any discussions so far with the administration about any of this, and what kind of opportunities would you be particularly looking at?
I mean, we've had ongoing discussions with this administration and other governments about the world about what's required. I think it's very clear what the Venezuelans want and what the Americans want at the moment seems to be equally aligned. They both want the oil to flow. They both want a stable oil market. And I think you'll find the policy of the US and probably other governments will be aligned to that goal of stability in the oil market, stability of Venezuelan flows and stability within that country. And the country still has requirements for finished grade products to keep its population moving. And I think the policies of both governments will be aligned.
You've had ongoing discussions, you say, with this government and with many governments. Do you get the sense that sanctions will be lifted anytime soon?
Well, I get the sense that they're going to have a policy that does exactly what I said, which will allow the oil to flow. I don't think they want a bottleneck of Venezuelan oil. I don't think they want an armada of ships floating there and, waiting to load and so on. It just creates deep inefficiencies. Now that I guess their main goal of Mr. Maduro leaving the country has been achieved, I think they'll get back to the normalcy of keeping the energy markets efficient, keeping it flowing. And I would imagine very, very quickly their policies would reflect that.
What would your asks be at Trafigura, Ben? What would you need to see before you would, allow your services to be used?
I mean, I guess the first and foremost is the safety and security of our people, safety and security who are on our vessels. We have an enormous fleet of oil vessels that are pretty useful in these kind of situations. So that's the first priority for us. And then it's the rules and regulations, right? You mentioned OFAC, there's sanctions and so on. So we've got to make sure there's a proper legal framework that we can operate within. There will be funds that have to be moved, exactly how that works. But the US government is well versed in all of these things. But it'll be a proper legal framework and the safety and security of our people and a high level of transparency of what's going to happen.
Would you be fine with a Delcy Rodriguez government that looks exactly the same like a Maduro government? And would you need reimbursement from the US?
Well, look, we're not here to dictate what governments are around the world and who's in charge. We don't have anything to do with politics, really. And with regards to the US reimbursing, I guess there's two parts to what they're talking about. They're talking about the immediate issue, which is keeping energy flowing both into Venezuela and out of Venezuela. That's a big logistics issue and obviously got some legal issues around it that will need solving. The second part that I know you referenced, Mr. Trump mentioning that he may be interested in reimbursing, this is more the upstream sector. This is going to take years to play out. And there will be some sort of arrangement made, I assume, mostly with the majors, probably American majors, the Chevrons who participates there at the moment, Exxon, et cetera, et cetera. And that will be a second problem, which will take months and months and months of negotiation to work out exactly how that framework works and how it's funded. But the reality is, Venezuela, for the entirety of my career, has been a very large oil producer. In 1998, it was well in excess of 3 million barrels. These days, it's closer to 1 million barrels. They're clearly going to try and increase production. Increasing production will take tens of billions of dollars and many, many years. There will have to be a framework how the people who invest that money get reimbursed. Now, the normal course of events is you'll be reimbursed through some offtake of the oil and some sort of profit share arrangement. If the American government wishes to assist in that process, then that will probably make it more likely to happen.
How many additional barrels could Venezuela supply, say, this year? And then when would we get back to that 2 to 3 million barrel mark?
I mean, this year, very few. I mean, you don't just click your fingers and change this, and nobody's very clear exactly what shape some of the infrastructure is in, although we do know it's been degraded. I don't think much will change at all this year. What you've really done for the prompt market is take out the likelihood that there's going to be a real problem in Venezuela where they produce substantially less this year because they're in some sort of open conflict or something with the US. And I think that's a little bit off the table now. So I think you've got a certainty around, well, some level of certainty around stability going forward for this year, but don't expect extra barrels to come quickly. You are talking a multi-year process, billions of dollars, but the targets can be significant. Can they get back to their 3 million barrels a day? That will take years, 10, 15, hundreds of billions of dollars to get there. And I think, that remains to be seen. Do I think there's likely to be, a resurgence in interest from the majors to go back to Venezuela and really produce, assuming that the stability remains? Absolutely. This is a country that has enormous oil reserves, the biggest in the world. And yes, in the grand scheme of oil production, it's actually pretty easy to produce. You've just got to get the right people on the ground, the right technology, the right equipment, and money.
Would you be at all interested in investing in refining or other kinds of assets in Venezuela at Trafigura, Ben?
I mean, look, we're open to opportunities. We're traditionally not an upstream producer. We're really a big logistics company. I think that where we can immediately help is with the logistic change that we have all over the planet. Now, our know-how about how to move hydrocarbons around the world. Would we be interested in supporting people who wish to go into the upstream market, assuming that all of the legal infrastructure around that are there? I mean, why not? We'll look at it. But I think there's a lot has to transpire before we really understand how the upstream segment in Venezuela is going to play out over the next couple of years.
Ben, how do you think there'll be a wider impact beyond Venezuela? So I'm thinking Ukraine, Russia, even Iran. How does this change the negotiations and the picture for potential oil supply down the road?
Yeah, I mean, that's what the market's been dealing with really for the last couple of years. I mean, we went through a year last year where we had an open conflict between Israel and Iran, and flat price really didn't even go that much higher. Even that was meant to be the big event that would force prices higher, and nothing really ever happened. And when that conflict came to an end, the market came tumbling back off. We're in an oversupplied market is the reality at the moment. Most of the market understands that there's plenty of oil around. Whilst I said the balances don't really change in Venezuela in the next 12 months, at least you've taken for now off the table that you've got a big disruption. So I guess it means probably lower oil prices, both in the prompt and in the medium term. I think Russia, Ukraine, with a bit of luck, 2026 is the year that this war can finally come to an end. You would imagine at that point there'll be some arrangement made where Russian energy at some point will return into the fold, and that's just more supply into a market that already has plenty. The wild card the market is worried about at the moment, or the bullish wild card, I would say, is Iran. Lots of talk about what's the current situation. Are the Americans going to act again? But frankly speaking, there's plenty of oil in the world at the moment. And, absent a huge problem, I don't foresee significantly higher prices, almost regardless of what events happen with Iran, with Ukraine, and with the Venezuela that looks to be a bit more stable at the moment.
Yeah, at Trafigura, you've coined the phrase super glut for what you think the oil market is in this year. Can I ask you about Tether? Because I know that you're involved as well in Tether and other assets like that, in particular a stable coin that some of these regimes use. What's your outlook for Tether and how it's going to be used this year?
I mean, look, alternative payment systems are certainly very interesting. I mean, we deal with an enormous amount of US dollars every day, but we are aware that the world is changing and moving forward, and people do want to peg their currencies to different things. Gold has certainly had a big move up in the last, 12 months, hasn't it, as people and central banks have been buying gold. Again, we will live within the regulations of the international markets. I think if there's ways that you can have payment systems that are, let's call it more modern, more forward-looking, fine. We'll work with it. I know we've looked at a number of these things over time, but the reality is the commodities market operates largely on US dollars. The traditional banking system, that hasn't changed for many, many years. So any change is likely to be slow in commodities. It's large amounts of money all over the planet. And it's really very rule-bound. I mean, this is not a cowboy industry. It's very well regulated. So, look, I suspect it changes slowly over time, but I don't think it's going to be a dramatic change in 2026 to what we do every day.